So I made a couple videos explaining how I used ICC/CCT scalping strategy, and people had many questions about it. So I figured I'd make a full step-by-step breakdown, just going over how I use the whole strategy, the Virgin Wick Theory, as I think I might call it. Yeah, just how I interpret ICC with a bunch of examples, and I'll just answer a bunch of common questions that you guys were asking as well. So I'll just do a quick top-down overview of how it works, and then I'll break it down step by step with real examples. So a common question people are asking is like, what is a Virgin Wick? Well, a Virgin Wick is essentially a wick that has been untouched, a wick that has not been penetrated, a wick that has not been ran through. So we'll go here, for example. So yeah, any wick that has not been revisited or touched since it was created. So for example, this is untouched, right? Because if you draw a line to the right, nothing else contacts it. This is untouched. This is a Virgin Wick because if you draw a line all the way to the right, nothing has touched it. But if we look at this one, if you draw a line to the right, oh, there we go, it's been touched by this one. So that is no longer a virgin. This one, yeah, that is not a virgin. This is a Virgin Wick, as you can see. If you go to this one, draw a line all the way to the right, nothing has touched it. So this is what I mean by a Virgin Wick, just essentially wicks that haven't been touched. See, they just go all the way straight to empty space. And yeah, I like to use the command, the shortcut Alt-J to draw these horizontal rays. Yeah, this one, Alt-J, horizontal ray. I don't know what it is on a Mac, you can figure it out, but yeah, I really like using those to mark out my points of interest. So essentially how the model works is, you're looking for, I'm gonna call this candle the Chad candle. You wanna look for a Chad candle to close through either one or multiple Virgin Wicks, okay? So in this example, we're closing through. See, candle opens here, closes here, it's closed through two Virgin Wicks. And essentially what we want to do is wait for price to, on the next candle, revisit either one of these Virgin Wick levels, and then bounce off it on the 1 minute time frame, and that's where we enter our longs. A helpful analogy to understanding how this works is, imagine there's a virgin and the virgin gets rammed through by a Chad. The next time price or Chad comes back to the virgin's gonna be like, no, I didn't like that. I didn't like that. I like, go away. You cannot penetrate me again. So if you come near me, I'm going to push you away. And so we want to get in when that virgin thing pushes Chad away again. That is essentially how you can visualize the model. Yeah, so I will go through how I break down this model from a top-down analysis to the entry, stop loss, TP, everything. Yeah, so I'll just go over a bunch of examples. Oh, yeah, a common question was, what is this session indicator I use? So it's called ICT Sessions and Kill Zones by Vince FXBT. It will not look like this when you load it up by default. You'll have to play around with the settings. You can pause this if you want and copy my settings. Yeah, heaps of people are asking. The other one I use is the new day divider. That's when you see like Monday, Tuesday, Wednesday, etc. And then the other one I use is Anch FVG, which just shows fair value gaps. So it's easier for me to spot inverse fair value gaps, which is one of our entry models, which I will get into. Okay. So let's start from the top. We're gonna wait for a Chad candle to close through some Virgin Wicks on the 1 hour. Okay, I only trade the 1 hour and the 1 minute time frame. So 1 hour is my high time frame analysis, and then I go down to the 1 minute to look for my entry. Yes, it's fast paced. Yes, it's scalping. Yes, you might get multiple trades in a day. But that's just what suits my personality. I like to scalp. I want to take multiple trades a day. I don't want to be someone who trades like once every 3 days. That's just my personality. I think I'm too impatient for that, so I might overreact and force trades or make mistakes. But if you like the slower pace, you can trade the daily as your high time frame analysis and then your 15-minute as your entry. That is what Crams and Capital does. Time is fractal, meaning if something works in one time frame, it'll probably work in another time frame. It's all the same thing, just extrapolated at different scales. So you can scalp, you can do high time frame. It's up to you. I like scalping. Okay, all right, let's begin. Okay, so we get a pretty decent Chad candle here. And so what we want to do now is look at the Virgin wicks that are closed through. So we can see this one, I'll mark this one off, Alt J, and this one was another Virgin wick that got closed through. And since the Chad candle was a bearish candle, we will therefore mark these off as bearish POIs. Red. Bear with me. And therefore, we want to look for shorts, okay? Now, I also like to mark out the next hour just to show me, okay, it is from this point onwards we can look for our entry model. So after the 8 a.m. candle closes, then at the 9 a.m. candle, we can start to look for entries. Okay, go down to the 1 minute. Then we want to look for price to close back above either one of our POIs. That's another question people are asking. What if there are multiple POIs? It doesn't matter. You look for your entry model on either of them. It's nothing special. So the first step of entry model is price closes back above the POI. Then we want to look for either an inverse fair value gap back the other way or a change in state of delivery the other way. So we'll see some examples of what that looks like. Okay, here. So, bang. As you can see, we do have this fair value gap here. But I'll just hide this, move this one so it's easier to see. Oh shit, should I explain fair value gap? If you are watching this, I would assume you already know what a fair value gap is, but if you don't, it is essentially when you have 3 candles, a big body in the middle, which creates a gap between the 2 wicks on the outside. That was a terrible explanation, but so you look at the high of this wick, all right, and then the low of this wick, and see how there's a gap between them. That is your fair value gap. And the inverse fair value gap is when you close beneath that gap, which is here. We finally get a close underneath that fair value gap. So this is where you would actually start to enter the position, a short position. I would put my stop at that high. That one seems a bit too high for my liking. And then, yeah, I would target this low personally for 1.33R. I like to play it safe. I would rather go for like 1 to 2R on each play just because, again, it works better for my psychology. The thing with risk reward is it actually doesn't really matter. Like if you go for higher RRs, you're just going to have a lower win rate. And if you go for a lower RR, then you're going to have a higher win rate. That's how I see it. And when you go for super high RRs, like 3R, 4R, the trades are going to take longer. You're going to give yourself more opportunities to fuck the trade up just by like closing it early, moving to break even early, taking partials. So for me, I'd prefer to just do a quick trade, 1 to 2R, and then get out. So yeah, this one goes to TP pretty quickly. Bang. there's your trade. All right, on to the next one. Here we've got another NQ trade. So yeah, there's your Chad candle. It closes through this POI, this Virgin Wick, this Virgin Wick, and this Virgin Wick. So again, we have multiple. I would go ahead and mark these as bullish because we have a bullish Chad candle, meaning we are now looking for longs from this point onwards. So drop down to the 1 minute. Waiting for price to engage with the POI. I believe this one takes a while. Yeah. So it did close under, but we don't have a entry model yet because we have not inversed this fair value gap and we don't have a change in state of delivery. So we continue to wait. Here we do have an inverse fair value gap. So here is where I would enter the long. I think we've got some people in the background. I'm at a public cafe, if you're wondering why there's random people in the background. But fuck it, we're just going to continue. Okay. Yeah, so here's your inverse fair value gap. Then we would put the stop at that low. And yeah, I would even just target that to not get too greedy with it. And boom, there you go. There's your TP hit. Nice and easy. On to the next one. Alright, so let's go. Next candle. Boom, you get a Chad candle. Close through a bunch of Virgin Wicks. The longer you do this, the quicker you will be at being able to identify Virgin Wicks. Like, essentially, for a bullish setup, you just look at the lowest one and then you just move diagonally up and you can kind of see it, just like that. Then we do our vertical line, drop down to the 1 minute, and we wait for our entry model at any POI. Nothing yet. Boom. Okay, there you go. There is your inverse fair value gap. So you would enter a long there. Stop at this low. If we look to the left, there is no clear target. So in this instance, I would just aim for a simple 2R. Can't go wrong with 2R. That's like, it's a nice standard base hit to go for. And there, we get it. Nice and easy. All right, on to the next one. Whoops. All right, we've got to go back a bit. Let's go back to this candle. Wait, did I just do this one? 16 December, 8 a.m. Oh yeah, I just did that one. All right, we'll do this one next. Okay, so this is the next example. We can see, yeah, this Chad bearish candle closes through this Virgin Wick and this Virgin Wick. So we mark off our POIs. So these are bearish POIs. We're gonna look for shorts. Mark our vertical line, drop down to the 1 minute. So we want to look for price to close above either one of these POIs and then present an entry model. And that's where we would get in. There we go. So yeah, price closed above this POI and then we got an inverse fair value gap here. So here's where you would enter. Stop there. Yeah, I'd target these lows. 1.67R, happy with that. Do we get it? Oh, wow. Oh yeah, we do get it. Took a while, but it does hit. I also want to add one more example that uses a change in state of delivery entry. Even though it's not as common as inverse fair value gap, it's still a valid entry. So we'll go through this example here. Yeah, this candle. So massive Chad, purple Chad. So we'll mark out our Virgin Wicks that got run through there. Bang, bang, bang. Bang, 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 bang. No, not this one. All right. So these are bullish POIs where we are looking for longs out of. Mark our next vertical line. So from the 1500 candle is when you would start looking for a close below one of these POIs on the 1 minute, and then an entry model back above. Yeah, so exactly on the first minute, we get a close below this first POI, which means this POI is now in play. Nothing there. Boom, okay, there. So, all right, I'll just delete this line just to make things clearer. This is what we call a change in state of delivery entry. So our big black candle that closed beneath the POI, what we want to see is a purple candle close above the open of this candle, okay? So above this line. Once we get confirmation of a close above that, that is a confirmed change in state of delivery in the way that I see it. So here's where you would enter your long, stop at these lows. And then, yeah, again, there's no real clear target here. So I would just go for a flat 2R. And bang, there you go, 2R. So this is what a change in state of delivery entry model looks like. Yeah, those were all the examples I had. Another common question I had was, do I have a group or a Discord or a Telegram? No, I don't have any group. Right now I'm just focusing on trading this model as best as I can, just working on getting payouts and documenting my journey here. I don't want to have to worry about managing a group, posting to the group and all that stuff. For right now, it's just a distraction. There is another good dude, Ali, however you say his name. He's also a CCT or ICC trader. And yeah, I actually discovered this model from one of his videos. So I'll leave a link to his channel below. And he actually has a school group, which is pretty active. And their members discuss this model. I'm actually in there as well, and I'm pretty active, probably one of the most active people after Ali. So yeah, for those wanting to discuss with others, feel free to join that. Another question I had was how many contracts I use per trade. I don't have a set number of contracts, but I am trading a bunch of 50K accounts, 50K prop firm accounts. So I try to keep my risk between $100 to $200 per trade. And so depending on how big the stop loss is, I will adjust my contract size so that if I lose, I only lose $100 to $200, if that makes sense. Yeah, I think that was all of the questions that people had, but hope that helps. If there are any other questions, please feel free to leave them. Cheers.